Well, at 12:01 a.m. tomorrow morning, it looks like we're going to have a government shutdown. So how's that going to affect these? I'm going to explain that to you today. What the biggest concern is your mortgage program still going to be available? Because if you're looking at USDA or FHA, you might have trouble closing on those loans because of a government shutdown. So we're going to go over that and all the other information that will be affecting these today, and I'm going to explain to you the whys behind it. So let's get to today's breaking news. It looks like we're going to have a government shutdown at midnight tonight, and the markets are starting to pull back from there. This was anticipated. So usually if you have a government shutdown, here's what happens. Everybody pulls their money out of equities, and they start piling into the bond market for some safety. So that's what it looks like they're doing. So I won't complain on this because the market doesn't look like it's cratering. But we also have oil down, which is fantastic, but it's also pulling down interest rates. So for that, let's get over to the MBS market. So here's what's happening in mortgage rates right now. There's really nothing going on. It's basically flat. The reason being is markets are trying to anticipate what's going to happen next. But here's the concern that most people should have. If you're looking for a USDA loan or an FHA loan at this point, or you haven't closed yet, you might have some problems. And here's why. USDA and FHA, they're really reliant on the government's sponsorship because the government basically guarantees these loans. So USDA, if you're looking at a USDA loan right now, they're not going to have the certificates for that, so you're not going to be able to close on a USDA loan. So hopefully in this video, I can explain to you some alternatives that you might have. If you're looking for an FHA loan, especially a reverse mortgage or a home improvement loan, these are going to be either way delayed or they're going to be canceled. So it depends on what your lender is going to do with those. And then another piece of this puzzle is flood insurance and the IRS. All these agencies are basically going to be shut down or basically on, limited staff, so you're probably not going to get any answers from those as well. So if you need flood insurance, it looks like you're going to be out of luck. And if you need any IRS information, if you're self-employed or anything, looks like you're going to be out of luck as well there. So instead of me complaining about all these programs that you won't be able to have, how about if we explain to you guys what you should do or how you should maneuver through these to figure out or make sure you can still close or refinance, save some money, or at least buy that house. So let's break that down a little bit, and then we're going to go over to the economic news. If you're in a USDA loan, you might have a backup for yourself. So if you fit USDA loans, you probably have a pretty decent credit score, and your loan to value or your debt ratio is pretty good. The problem is you didn't have to put any money down. So an alternative to this would be, because it's most likely going to be canceled, is possibly get into an FHA loan. Now, FHA loans require 3.5% down. They do come with mortgage insurance. So you're going to have another mortgage, an added piece to your mortgage payment, which is called MIP when it comes to FHA. So whenever you don't put down 20%, you need what's called mortgage insurance. USDA doesn't require it and VA doesn't require it. But FHA does hit you for that. So it could add another $100, maybe $150 to your payment. Okay, so that's the alternatives there. If you got an FHA loan and you're looking for an alternative, it might be a little challenging because the reason why you might have went FHA is you had a limited down payment, your credit scores might have been low, or you just had some credit issues, or maybe even your debt ratio is higher than conventional loans would allow. So that's this one, FHA. If you're in an FHA loan now and you're having trouble, your lender won't continue with that, I'd love to be able to help out and help you maneuver through these because, folks, I've been doing this for over 30 years. I've been through a couple of these, so hopefully you can use my experience to help you maneuver through this process. So please reach out to us. I'll give you all my information at the end of this video. The economic news we had for the week, well, we're going to get this today. It's the JOLTS index. This is job openings and labor transfers. And the Fed, their most concern right now was the jobs report. And the problem we have now is there was going to be a slew of information coming this week on the jobs numbers. So we were going to get the JOLT number, which we will today. It's job openings and labor transfers. We will get the ADP payroll number tomorrow because they're not a government sponsorship, but you know how I feel about the ADP payroll numbers. But then on Thursday, we're going to get initial jobless claims and continued claims. That's going to help us, or at least help the Fed to figure out what's going on there. And then on Friday, we're going to get the official numbers, the unemployment rate, non-farm payroll, average or hourly earnings, everything that the Federal Reserve was really focused in on. So now they're not going to have this data. So what's really going to go on? Well, that's the Moneyball number that we're trying to figure out. What's going to happen in most cases, the Dow Jones, the NASDAQ, the S&P, and the Russell probably going to take it on the chin a little bit. These are the equity markets because in most cases, people are just going to be reluctant to invest in anything. So they're going to halt their investments or maybe pull out a little bit and move their money into safe havens such as bonds. You're also seeing bonds coming down nicely right through here. Oil's coming down nicely. So across the board, I don't like any of these numbers, but I'm loving the oil down to $62 a barrel, and also with interest rates coming down because this is 4.15 or 4.16 just recently. So let's get over to how is this going to affect the Fed? Well, the Federal Reserve, they've been monitoring inflation with the PCE. That came out recently, and that took a little bit of an uptick. But their main concern, and even they said it in their statement, was right through here. They don't want the unemployment rate to spike. So now they're not going to be getting these numbers. So what are they going to do? Well, that's the question that everybody has. So what the markets probably will do, if this is a short-term duration, the markets will move just a little bit up or down, and they'll just kind of stay stagnant until really we see negotiations coming to fruition. But if it lasts longer, that's where the training wheels can really come off at. So I've been doing this for over 30 years. I would love to explain to you guys or help you understand or maneuver through this market. So if you need some guidance, if you're trying to refinance, or if you're trying to buy, I'd love to be able to help you. My name is Dan Frio. I do this report each day. I'm a federally licensed mortgage loan officer, licensed in all 50 states as well as Puerto Rico. I'd love to be able to help you and maneuver through this process. So I'll give you my information here in a second. But here's what we want to focus in on. Federal Reserve, what are they going to do at the next few meetings? Because this has been upticking just a little bit over the last few days. So what this is the CME FedWatch group, or the CME group, is basically uses the futures market to predict where rates are going to go from what the Federal Reserve controls, and that's the federal funds rate. So if we go down through here, in 29 days, the Federal Reserve is going to be meeting. What are they going to do? We're going to track this every day because this is pretty volatile right now. So right now it's telling us that there's a 90.3% chance at the October 29th meeting, the federal funds rate, or the new federal funds rate, will be 3.75 to 4%. That is lower. That's a 0.25% lower than where we are now. To prove that, I'll show it to you right here. Here's the federal funds rate right through here. They go in quarter increments. So right through here, this is saying we're going to get a 0.25% rate cut, and then some more good news. It's saying at the December meeting, there's now a 70% chance there'll be an additional cut. So based on the CME FedWatch group, this is telling us there's more certainties of rate cuts coming in the future. But the unfortunate part is we don't really know what's going to go on with this, and that's where that's going to throw everything off on a tangent. So my focus is on now, and my recommendations for you guys would be just watch me each day, opening bell, closing bell, and I'll give you directions on where rates are going and the whys behind it. So now over to me. Folks, my name is Dan Frio. I do this report each day to help inform you guys what in the heck's going on with mortgage rates and mortgage programs. If you need some assistance when it comes to buying or refinancing, I'd love to be able to help you. I'm licensed in all 50 states as well as Puerto Rico, and I have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, check out our live event tomorrow with me and Alan. We show you behind the scenes how we compare your loan with over 30 different lenders to assure you're getting the lowest rate and the lowest fees in the business. So thanks for watching, folks. Have a great day. Be safe and pay attention to the markets to see where they're going today. And I'll be back at the live event, Stock Talk Tuesday with Dan, how to maneuver a volatile market like this when it comes to stocks. So thanks for watching, folks. I'll see you later this afternoon, and we're also at the closing bell to let you know how this mess ends for the day. Thanks for watching. See you then. Bye-bye.